Hello, welcome to the Crypto with Kash podcast, episode 18, I think. Should have checked that before we started. My name's Duncan Morland. I'm your host today, and I am in. Where did you reckon I am in, Kash? What does this look like?
I said somewhere in Tottenham.
In Tottenham, yeah.
Haringey.
Yeah, I'm not in my lounge in Devon. I'm in Tottenham on a roof somewhere. It's sunny, and I'm joined by Kashaya Bassi, our resident crypto expert. Kash, where are you? You look like you're in a...
I look like I'm in an office somewhere really nice. Nicer than where I'm really.
Yeah.
It's nice and bright outside, but where I am, it's dark right now. So
yeah, dark like the crypto markets currently.
Yeah. That was a good one.
A smooth transition into some of our topics today. So first of all, how are you doing?
Yeah, I'm all good, thank you. I just came back from the gym, so feeling pumped, feeling ready. Yep. How about yourself?
Yeah, I'm good. I've just got back from climbing actually, so
Is it indoors or is it like an outdoor?
It's like an indoor center, and you just climb up the walls and fall off, and then the ropes catch you basically. But yeah, it's
awesome.
Yeah, I was scared of heights before I started doing it, and now I'm still scared of heights, but I fall off walls. So it's slowly going away.
It's progress.
Yeah. So on today's agenda, we're going to talk about Terra Luna, the collapse of Terra Luna, which involves the collapse of the Terra stablecoin, the collapse of the Luna cryptocurrency, and we can talk about what's happened there and the impacts on the wider crypto markets. I'm going to talk about the wider crypto markets, like they've been in quite a negative trend, along with the S&P 500 and the stock market. Yeah. And then we had a question from Graham in the Crypto with Kash community, and he wanted to know what's the best ways or some good ways to cash out of the crypto space. So when you're taking profits, what are the best ways to sell your crypto and then move it back into pounds or dollars, whatever your currency you're using, or euros, I guess. So what should we start with, Kash? Should we start with Terra Luna?
Yeah, let's go for it.
Do you want to give everyone a kind of summary of what happens? I've got some tabs loaded up so I can
yeah, so essentially
charts and stuff.
Yeah, so Terra Luna, so the project's called Terra, the ticker is called Luna. Essentially, it's a layer 1 blockchain which allows people to build projects on top of the platform, similar to Ethereum, similar to Solana. We also created this stable coin called UST, which quickly became one of the fastest growing stable coins on the market. I think it reached $17 billion, $18 billion in market cap at one point. Essentially, what happened, it's an algorithmic stable coin. So essentially, there's code that maintains the peg to $1. So one USD would be technically worth $1. But what happened is that a lot of people started cashing out of their holdings, which kind of caused the price to depeg, and that put pressure on Terra Luna, and it kind of started this sort of vicious cycle of both of the projects pulling each other down, which ultimately led to hyperinflation for Terra Luna, which basically took the price down from, I think it was $120 at the peak. $120 at the peak, all the way down to less than a penny, like much smaller than a penny, which means that a lot of people lost a lot of money, unfortunately. With the UST, what a lot of people were doing was there was this platform called Anchor. It was offering around 19% interest on your USD holding. So many people had.
I mean, it still is if you want to invest in it.
Yeah, it was offering 18%, 19% interest on your USD holdings, and a lot of people were putting their money there to earn interest on it, essentially because they believed in the project. They believed that USD would hold its peg, but unfortunately, since that's happened, I think USD's fallen down to 9 cents, which means a lot of people have lost 90, maybe 95% of their investment.
Yeah,
It's
so
7 cents now, so it's down 30% on the day. A similar thing happened to Luna. So it dropped from $120. It dropped 90% to around $10. It dropped another 90% to around $1. It dropped another 90% to 10 cents. It dropped another 90% again to 1 cent, and it kept falling. And I think at one point, as you can see there, it says minus 100%, which very rarely happens. I think this is one of the only times in crypto where a coin has literally gone to zero. Because even when, for example, I think it was 2018 where a Ponzi scheme called BitConnect, when that crashed, it went down 99%. There was still some coins trading for a certain value, but this dropped so much it went down like 100% essentially.
Yeah, and there has been people comparing this to BitConnect from what I've seen, but I'd say it's a bit different to that. I mean, I wrote about this, and I actually did wrote a guide to invest in Anchor, and I had a bit of money in it, and I thought it was relatively safe, I guess, like a lot of people.
That's the thing. So that's exactly why this sort of project caught a lot of people out. So it was a top 10 project. I think at one point it was top 5. It was backed by some big brains in crypto. Even this Anchor protocol, it was backed by billionaires. Zusu was backing it. I think this Korean VC firm called Hashed, they lost 3.5 billion in their investment on Luna, which is around 90%, I think, of their portfolio.
Yeah, I mean,
so a lot of firms and big traders, big institutional players got caught out by this project. I think it essentially wiped off $40 to $50 billion of market cap from the markets.
Yeah, I think so. One of the things I thought in retrospect, obviously, is like they had to do a few things, like they had to top up the reserves manually almost. So it was supposed to develop into a self-sustaining kind of savings account, the Anchor part of the Terra Luna ecosystem, I guess, where people would deposit their crypto to borrow, and then other people on the other side would sort of could put in their savings, which would get lent, and then you would get the percentage yield return. So essentially like getting rid of the middleman, the kind of crypto ideal, I guess.
Yeah.
But there wasn't a balance between borrowers and savers. So the yield reserve was there to sort of keep the yield up, the savings account kind of interest. But it was rapidly going down, and then they put in more money to the yield reserves, a lot of money into it. I don't know if that had
they actually had to. They bought $3.5 billion in the run up, hoping to start a sort of reserve, as you were saying.
Yeah.
And they were hoping to build that out to $10 billion. But as soon as it started depegging, they started dumping their reserves to try and bring the peg back. But essentially what happened was the market was moving so fast against them, even after they dumped $3.5 billion worth of Bitcoin. The market luckily managed to absorb a lot of it, but that meant that USD was just unable to keep its peg, and it just kept spiraling.
I read, I don't know how, maybe you tell me if it's accurate. I read that there was some sort of rumors about it being a concentrated attack by, I don't know whether it was exchanges or something, that people had, they were aware that Terra Luna had been buying huge amounts of Bitcoin as a reserve, I guess. And I think we talked about that in past podcasts. And then they were trying to force them to sell it at the new lower price of Bitcoin. But I don't know how much credibility there is around that.
Whenever something like this happens, whenever there's like a big event, there's always speculation of who's being targeted and what actually happened. Maybe it's a massive conspiracy theory. It's very difficult to say, but a lot of these VC firms have come out and put their hands up and said we've lost a lot of money. A lot of them actually have come out and said we weren't involved. So people were definitely affected, which is the unfortunate thing, because when you're investing in a stable coin, it's meant to be stable. You're under the belief that it's going to hold its peg, but unfortunately that wasn't the case this time around, and a lot of people have lost out on a lot of money.
And I guess like even though it was an algorithmic stablecoin, so with say USDC or Tether, they have a bunch of reserves. So the idea is you can exchange one of their stablecoin dollars for a real dollar, and they have that in reserve to guarantee that. With this, it was a bit different because it was sort of backed by Luna, I think. Like, so Luna would be burnt to mint. So Luna is the Terra ecosystem's crypto, and Luna would be burnt to make more UST, I think. That's how it works.
And so the interesting thing is, once UST actually collapsed, a lot of people started cashing out of their USDT sort of holdings as well, in case
worried,
because they were worried the same thing might happen. And I think in the past 7 or 8 days, $7.5 billion worth of Tether has been cashed out, and Tether's been able to honor each and every sort of request, and it's still holding its peg, which is the difference between a collateralized and uncollateralized stablecoin.
Yeah, and I guess just want to make 2 points about this. I guess one is the amount of stories I've read of people who lost everything pretty much, or lost huge amounts of money, and relative to the amount of money they had, this life savings and all this kind of things, because of the perception of Anchor being very safe and the Terra ecosystem being very safe.
Yeah,
and like when I said, when I wrote a guide for it and researched it, and I put some money into it. Like my analysis, to me, when I went through looking at the team, looking at the various sort of like, is it audited? Like, how does it work? All these things lined up. And my analysis was that it was relatively safe for crypto, obviously.
Yeah.
There's always that caveat of crypto is, even income stuff in crypto is more risky than stocks and that kind of thing.
Yeah, exactly.
But the absolute risk here, I guess, is, and I guess with all crypto projects, is zero, because there is no, it's not like your savings account where the government will step in or anything like that. Like, the absolute risk is zero. But I guess for me, one of the questions is, like, going forward, how do you, it's definitely going to make my assessments of what's safe and what's not in the crypto space different, and maybe make me take higher risks on the income side. Do you know what I mean? Like, because you can get higher interest rate yields. Like,
that's the thing. So it was paying out the super high interest for months. It's been going on, I think, for 7-8 months now at least, and I was paying it. It's just the fact that when it lost its peg, that's what caused everything to spiral. And it's essentially become worthless now, which is unfortunate. I think a lot of people are very skeptical about algorithmic stablecoins, and this would potentially be the nail on the coffin of algorithmic stablecoins. And I think more people are going to be going towards stablecoins which are actually backed by reserves, real reserves in a bank, which Tether claims to be and seems to be holding that very well. USDC as well, and BUSD, which is Binance's stablecoin.
Yeah, I guess I was thinking a lot of those are like centralized, essentially. You're trusting that Tether has this stuff, and USDC, even though they're very transparent, those reserves are held by a company or whatever, which kind of goes against some of the ethos of the cryptocurrency. I don't know how to pronounce it, but DAI, the sort of Ethereum the Ethereum native stable coin, from what I can gather, is backed by Ethereum reserves, and is decentralized, essentially. Is that right?
Yeah.
So maybe that's an alternative for, I don't know, geeks like me.
A lot of people use DAI because they feel like it's decentralized, but like, for example, for perhaps bad actors would use it to launder their money because it's decentralized, whereas they say Tether is centralized by a company. But I feel like when there are hackers, and when a protocol does get hacked and money starts being laundered through all these different protocols, such as DAI, then what exchanges can do is just block any of those assets being deposited into their exchanges. and any associated wallets from being able to access the services offered by the platforms. So, you know, that people say it's decentralized, but ultimately when it comes to actually cashing out, then centralized parties are involved on that end, and it's different.
Yeah, maybe that's a good segue into Graham's question from. So Graham's a long-standing member of the Crypto With Kash community, and he was asking the other day about, you know, like when he's taking profits, and he trades quite regularly. Like, so he's been buying some of the market dips and stuff recently, I think, and I think he got in on trading Terra Luna a bit as well, as it was bouncing up and down.
Yeah, it was.
So he asked how, you know, what's the best kind of ways, and I guess best would mean like easiest, cheapest, you know, most efficient ways to get money back out of the crypto ecosystem and into pound coins that you can actually spend.
I mean, I would say one of the best ways to do that is to actually cash out through Coinbase. So you can either send your assets directly to Coinbase or transfer it into USDT and deposit that into Coinbase. Or if you don't want to pay the transaction fees, transfer it into Solana and send that over. So the gas fees are less than a penny, and then you can sell on the exchange and cash out. The way to cash out is by just connecting your payment method to the platform, same way you would do that with any other platform. You just follow the instructions, select your payment method type, and click withdraw, and it should be there within a matter of hours.
Yeah, I think that it seems like that's pretty much the only way. There is, when we were chatting in the group chat, you know, I mentioned that there are decentralized exchanges. There's one called BISC, BISQ, but it's just very like unintuitive to set up and fiddly, and it's like the kind of thing where, you know, you have to be a bit tech savvy to do it, you know, and it's anonymous. That's the benefit, I think, you know, like you can move. You're selling to another person.
One thing I'd recommend when it comes to Coinbase is, so Coinbase, you can log in to Coinbase Pro and the normal Coinbase. The normal Coinbase is a lot more user intuitive, I would say. It's got simple buy and sell buttons. There's only 2 buttons, but if you sell on there, there's high fees that you'd have to pay. You're, you know, essentially paying for the convenience. But you can use your login to sign into Coinbase Pro. There you can market sell, and the fees will be much lower. So if you are familiar with the different platforms, I would definitely recommend using Coinbase Pro to cash out.
Yeah, maybe one thing I thought was maybe in the future, because we've talked about before, like Onramps, which are kind of you can send money straight from your bank account to a say a DeFi wallet, you know, straight into the crypto ecosystem and kind of skip the centralized exchanges. As far as I know, an off-ramp equivalent doesn't yet exist, but maybe in the future it will, where you can just like send crypto from your decentralized crypto wallet straight back into your bank account in this sort of smooth transaction. But
and that's one of the reasons why a lot of people say we are still early. You know, the infrastructure is getting there, but it's not there yet. And maybe in the next few years, then cashing out from a decentralized exchange would be just as easy as it is currently with centralized exchanges. Yeah,
and also like I know that I've got like the crypto wallet I use has loads of functionality built into the wallet itself. You know, you can invest in index funds within the wallet and all this other stuff. And I imagine that they'll increasingly make the process of getting money in and out of the space almost, I think we talked about it before, like where you don't even really, you're not even aware. Well, you obviously, I'm aware of investing in crypto, but
it's so seamless. It's just like any other website.
Yeah, exactly. Yeah. So shall we have a look at what's been going on in the markets recently? If I share my screen, then we can have a general look at CoinGecko, which is, just tell me if you can see. Do you see that?
Yeah. Okay. Bitcoin's back above 30,000. It's been trading around 29-30 for the last few days. It's finding support at the 30,000 level, which is the level we actually pointed out in our previous update. 30,000 was actually the support level that held during the May crash last year. So they had 3 touches, and it bounced off every time. Back in it was June. So at first it was in May, June, and then July it bounced off, and it went on to hit new highs. So we're currently at those levels again. A lot of people believe that we may be headed lower. I wouldn't be surprised if we do, because the global markets are down. We have inflation hitting 40-year highs in the UK, multi-decade highs in the US. We have interest rate hikes happening on almost every month now, and they may continue to do so for the next couple of months. So I wouldn't be surprised if we do head lower. Of course, for us, because we are focused on the long term, that's not really a cause of concern. We're actually going to be buying down all the way down and laddering in our buy orders to average down on our current positions. Yeah,
and I think just to illustrate kind of what you're talking about, like you can still see the charts at the moment.
Yeah.
So if you hit max, obviously, like the Bitcoin max chart is insane, but that's kind of the point, is that over the long term
it's had many peaks,
upwards trajectory. And the same with the S&P 500. So the US stock market, it's lost essentially all of its gains since last year. But if you go on to the 5 years, it's higher than it was in 2019 and 2018 drastically.
Exactly.
And you go on max again, you have this long-term trajectory of upwards, which is growth in wealth.
And so what's interesting is when the markets are going up, you always tell yourself, oh, I wish I bought more. When it was down, oh, I wish I could go back and buy more. And then when the dip comes, you're saying to yourself, oh, maybe I should wait, maybe it's going lower. But that's why it's just part of human psychology. And that's why we try to combat that by laddering in our buy orders as opposed to going all in. These are just one of the ways that we try to overcome these sort of hurdles.
I mean, it is, when markets inevitably do go back up in the future, and everybody's talking about it again and stuff, that's when people will be investing because they're worried about missing out, not now when the sentiment is very negative. And if you believe that it's going to go back up in the future, essentially things are on discount at the moment. If you still believe in the fundamental analysis that you've done in your write-ups and stuff.
Actually, we're not the only ones who think like this either. Like, for example, Jack Dorsey, the CEO of Twitter, someone asking why he never talks about the price of Bitcoin, because he's always talking about Bitcoin and how it's essentially the future of finance and all the different possibilities, and he said it's because he's not really worried about the price, because he simply knows it's going to be high in the future. And that's essentially what we think as well. Of course, short-term price fluctuations can be worrying, but long-term, the trajectory, as you said, is upwards. And I think one way I personally look at investing and stuff, and I know a lot of people on different investing communities, especially long-term ones like Boggleheads, which invest broadly in the stock market, they almost it's a part of an investment. They will invest every month ongoing, whether it's as small amount, it's relative to everyone, isn't it? So but they will put aside a bit of money to invest every month, and it's kind of a outgoing that they do consistently. Like if you were saving, you put whatever amount in your bank every month to save, essentially treating the markets as a higher risk, but a different way to grow money, like you would with a savings account, and hopefully beat inflation over the long term. I mean, I think that's a huge thing as well, like just sort of maintaining the value of money with that, with so much inflation, making money is definitely good, but keeping its value as well. Because if you leave it in the bank, then you lose 9% of it,
which is why the 20% yield on Terra Luna is so appealing.
Exactly,
because it was above inflation, but it wasn't sustainable. For people that are, maybe we can do a podcast on this, maybe the next podcast or something. But off the top of your head, do you have any sort of crypto income projects that you sort of rate highly, that you feel like ones you're maybe personally interested in, or ones that have been around for a long time?
Well, there are, Binance Earn at the moment is still offering interest rates on stable coins and also cryptos. So if you are holding cryptocurrencies, which you foresee yourself holding for the long term, then you could stake it on there or just lock it in and earn interest on it. They're also offering yields on stable coins. So BUSD, I think, still a couple percentage points, which is better than nothing. If you are planning to hold for the long term, then why not just lock it in there and earn interest on it? The other ones, there are obviously other platforms out there, but there's always risks involved with that. And of course, with Binance, it's the same. But with other platforms, there's protocol risks and smart contract risks. Whereas with Binance, since it is centralized, they also have a massive, insurance fund. So if something does go wrong, they'll be able to cover you. Whereas with these decentralized platforms, there's no guarantee that anyone will come and rescue you should something go wrong.
Yeah. Maybe sort of short term, maybe you can chase those short term high yields, get in and out. A couple of months earning 100% yields, chasing the yield farming stuff. But I mean, talking about yield farming is definitely a whole episode, I think. But maybe we can do that if there's some interest in the community.
Yeah.
Okay. Was there anything else you wanted to talk about or say at the end of this cast?
No, I think we covered everything. The market's Bitcoin's back above 30, which is always good to see. Hopefully it holds. If not, if it goes lower, then we'll be waiting to buy some more. Yeah.
Okay. Well, thank you for your time this evening, Kash, and thank you for everybody who's listening. If there's anything you want us, if you've made it to the end of this podcast, and there's anything you'd like us to talk about in the future, then just drop us a comment on YouTube or send us an email. Our contact details will be in and around the podcast somewhere. If you want more of this, then we appreciate if you subscribe and like us. I think it's still like me, you, the Bet Chat team, and maybe my mum liking the videos, but there's still 5 people. And yeah, thanks again, Kash, and speak again soon.
Thank you very much for having me. Take care and all the best.
Yeah, you too.